on the back of very strong volumes. So, the market is lively. I think that's the way to put it. A lot of volumes, market breadth not that apart in terms of number of gainers and number of losers. All in all, it's a pretty lively kind of start with lots of volumes. Harsha Upadhyaya is joining us, Chief Investment Officer, Equity at Kotak Mutual Fund. He's our market master of the day. Harsha, great to have you with us here. Thank you very much. I remember the last time we had spoken, you'd indicated that corporate India financials were starting to deteriorate a little bit, and you kind of highlighted specific worries. How is that? Has that played out in terms of impact on stocks? Anything additional you want to mention looking at the earnings that we are seeing in the third quarter? Because back then we were kind of, the comment was based on the fact of the second quarter numbers, but we've got new evidence now. What are your new thoughts, additional thoughts? Go on.
Good morning. What we have seen until now is only frontline companies announcing results. And until now, we have not seen so much of pressure on either profitability or cash flows, I would say. In fact, it's been slightly better than expectations at this point of time. As of Tuesday, there were about 17 nifty companies which had announced results. And as per expectations, we were looking at about 8% profitability growth. And that has been actually about 10.5%. So to that extent, at least the early results that we have seen have been slightly better than expectations. And usually you would see the second half of the earnings season is where you would see more disappointments. Keeping some room for that, I would say we may end the overall earnings season more or less in line with expectations.
Okay. By the way, just a couple of more nuances on the auto sector. After Amara Raja's strong showing, Exide is the one that is powering ahead. So in anticipation of good numbers, Exide is up 2.5% right now. Amara Raja and Exide both doing pretty well at the moment. Ashok Leyland, after Tata Motors numbers, Ashok Leyland is the one that's gaining ground now, 3% higher. Hasn't come out with numbers just yet, but looking pretty good. So there's a scramble for buying into these names after the good showing that we've seen. Harsha, in fact, I wanted your thoughts on the sector itself. It's come back after a long lull period. What are the pockets that you would buy now?
Good morning, Surya. Clearly, auto is one of the sectors where we have been positive for the last couple of quarters. We have been building our positions there. And if you look at the results that have come out until now, our thesis continues to hold true, and we continue to remain positive. Some of the supply constraints that we were seeing in the industry are kind of easing. We expect that commodity inflation, which used to hurt margins in the past, is not going to be as possible going forward. And overall, in terms of the new product launches and the kind of interest that we have seen from the consumers, seems to indicate that demand is likely to remain quite healthy even going forward. So overall, auto remains to be one of the sectors where we continue to remain positive.
Okay. Hi, Harsha. Good morning. The sector that's surprised on the positive side is the IT space. Everyone was throwing in the towel. There were risks still that could be on the table. But what's your sense? It's seen a big pop-up. Do you think it's good for more?
Nigel, difficult to say, because if you look at structurally, US growth and European growth will remain under pressure even going forward. What we have seen until now is the execution of IT spend that was penciled in sometime in the beginning of the last calendar year. So at that point of time, you didn't have any of the global worries in front of you. And IT spend was generally strong, given that we were coming out of COVID disruption. But as of now, when you look at the new IT budgets, which will be decided as we move forward, there will be an issue in terms of how businesses will look at their profitability, and their worries on the profitability will drive IT spend lower, in our opinion. So to that extent, 2023 IT business momentum could be lower than what we have seen in 2022. If that comes true, then I think you may see pop-ups every now and then, given that valuations have corrected. But on a structural basis, I think some of the domestic-facing sectors would do much better than IT, in our opinion.
Do you have any major expectation from the budget this time, Harsha? I mean, it's expected to be a capex-heavy budget. The focus could be on manufacturing. But that's generally what we do, right? Anticipate these things ahead of the union budget. Your thoughts?
Clearly, over the years, we have seen continuation of policies through budget and otherwise as well. So to that extent, clearly PLI, manufacturing sector, these are some of the areas where government has been focusing even in the past. Affordable housing, or how to revive rural economy. These will be some of the key aspects that you will find from this budget as well, is what we think. Overall, I think it will be a tight balance between how fiscal prudence has to be looked at, given that there are growth requirements as well in terms of the capex spend. So I think it will be a fine balance between these two is what you can expect.
You know, look, when is the last time you saw Tata Motors up 8%? It's at 450 and it's a sharp, huge volumes as well. It's seen earnings upgrades, right? I mean, that's what matters for stocks, upgrades or downgrades, and this one has seen upgrades. A lot of pessimism, but JLR has done well, as Sonia has been highlighting. Of course, I mean, there are still doubters who say, well, will this last? But for now, it's up 7. Bajaj Auto is the other one, heavyweight, 6% on that one. So this is looking good. Zomato is up about 7% as well. A lot of people, Harsha, we've spoken to recently have, not a lot, maybe a few, have referred to, and they've bought stocks like Zomato, they've bought stocks like Paytm, you know, some have bought delivery. Any view on these names? You know, it's not, they've been around for a while. Prices have corrected a lot. Companies in many cases are now openly talking about profitability in FY24, if not FY25. What's your sense?
Prashant, you're right. Prices have corrected, but I'm not so sure whether the valuations have corrected in some of those names. Entire internet space is, to us, seems like it's still quoting at a very high valuation. So you can't just generalize the entire space and take a view on the space. Yes, there will be some companies which will do better in terms of the business models within that space, and you will have to look at those from a bottom-up perspective rather than taking overall view that the entire sector has corrected on a price basis, and hence it becomes a good buy or stock pick.
Okay, well, just before we let you go, you know, there's been a lot of pressure on the Adani Group stocks. Just wanted your thoughts here and what the approach should be now.
Sonia, as you know, we don't comment on individual stocks or individual groups. So to that extent, I have no comments to make. But I'm sure that people who have been in the equity markets are used to volatility in the stock markets. And if you're a long-term investor and if your portfolios are well diversified and well balanced, I'm sure you'll be able to wade through this volatility as well.
Okay, by the way, there's plenty of it. Now the market is selling off like 9 pins. So just look at that. The sensex is now down over 500 points. The nifty is down about 130 points. So it's a rapid selling pressure that you're seeing. And Adani Group stocks are taking it on the chin this morning, along with a lot of banks. So ICICI, SBI, Axis Bank are all down to the lowest point of trade. Not looking like a good start to trade at all.
No, Sonia, it's not. And by the way, you know, you've got the nifty itself, which is now below the January 12th low. 17,761 was that level, and we've gone through it very quickly. I mean, just now, 17,750 now on the nifty. I think we should put that on alert as well. So 17,761 is the 12th of January last sort of major decent swing low, and that has now been breached on the downside. The bank nifty did that right at the word go in the morning, and we kind of alluded to that. That's, of course, that's the index which is looking weaker. It's more firmly in the grips of a downtrend, at least right now. Nigel.
You know, I'll tell you what, the Nifty Bank, it's hit the lowest level since November 3rd.
Yeah.
You know, we didn't break that 41,000 odd mark, but today we've gone back to those levels, and that's the problem pocket. I'll tell you what, you're talking about in 2 sessions, the Nifty Bank going down 1,800 points, and we're not yet done. You want to see some kind of support coming for the Nifty Bank, otherwise you're just throwing in the towel with regard to the Nifty. So just thought I'll make that short point. November 3rd is when we went, you know, below that 41,000 odd mark. So clearly the Nifty Bank, that's the one that's getting a hard knock. And there was a bit of a relief that we saw, but that got sold into. So let's see how this plays out.
Okay, well, let's get back to talking about the Adani Group stocks then. So it all ties in, right? Abhishek is here to tell us what brokerages have to say on the exposure that banks have to the Adani Group companies. That could perhaps be one of the reasons why the banks are under pressure as well. Abhishek, over to you.
Well, Sonia, as you mentioned, you know, a brokerage